is such an important thing, because when you invest for cash flow, you invest ultimately, when you do it the right way, in companies and hard assets that effectively have inflation protection. So value is directly tied to whatever that asset is, and if you can buy an asset that is directly tied to or kind of like hedged against inflation, if you will, because it's a hard asset, and as the dollar gets devalued, the asset value naturally, intrinsically, is going to go up in value with inflation. That's just the way it's going to work over the long run. So if you can get that hard asset also kicking out passive income through a dividend or some other sort of payment, then it really, really can work out in your favor. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, I want to talk to you about how to invest to make passive income. Now, this is one of my favorite topics in the world to talk about. This is what my book is about. I wrote the book Cash Flow Hacking. I call it cash flow hacking because I believe that investing for cash flow is one of the most important things that people can do if they want to reach financial freedom faster. Now, if you want, by the way, just side note, down below in the description, you can get a free copy of the book by going to cashflowhackingbook.com. You can go to Amazon and get it for $19.95, or you can go down there and get it for $8.95. Just cover the shipping and handling with that $8.95. We cover the rest of it. We ship it to you. Give us your address. We'll ship it to you. No big deal. So go down and check that out, and that is what it is. So that's a little side plug. Also, if you're interested in investing for passive income, if you're interested in the concept of cash flow hacking, you're going to make sure that you want to subscribe to this channel, click that bell. That way you get notified every time we launch a new video, and we will go from there. So let's get into this. So before I get into how to do it, I think it's important to kind of call the problem to the table, if you will. A lot of people say that they want this kind of unicorn, if you will, of passive income, right? It's mailbox money, passive income, turnkey investments, it's just residual income, all these different ways of looking at passive income or ways to speak about it. But the bottom line with passive income is you have to do things differently. And the big problem that we have in this country, or I guess North America, probably most of the world for that matter, is that the financial system is not set up for you to invest for passive income. It's not set up for you to really be in a position where you can reach financial freedom in the fastest, most predictable, most efficient way, in a way that you actually control the results. We've been kind of taught this mindset that we can buy and hold and invest and kind of put money in accounts and hold it for 30 to 40 years, all in hopes that when we do this and we just stuff money into these accounts, that they're going to be big enough, there's going to be enough money there, it's going to be accessible, and all this stuff is set up ultimately, in my opinion, for you to fail. When you look at the important variables that come into successful investing, remember, it's not about how much money you have, it's about how much purchasing power you have. It's about how much your money can buy for you and the lifestyle that your money can provide for you. Let's face it, I don't think I'm going to have to do much to educate you on the concept that if you have $1 million today, that $1 million doesn't go as far for you as $1 million went back in 1980, we'll say, right? $1 million was worth a lot more in 1980 than it is in 2022, simply because of the fact inflation has played a huge role in the equation, right? It's devalued the purchasing power of our money. A lot of people don't realize or take into account the role inflation has in the amount of money that they're going to need 20, 30, 40 years from now, right? So that's a big thing that you have to understand. The other components to the long-term investing strategies that people don't understand are the tax liabilities. I mean, unfortunately, most people, over $27 trillion right now in the United States alone, is sitting inside of qualified accounts. Now, qualified accounts are basically accounts that you're in partnership with the government, which, in my opinion, the government is one of the worst money managers in the history of the earth, and they're in debt, they're insolvent, and ultimately, when it comes down to it, they're going to have to raise tax revenue to be able to pay for their bad financial decisions and their irresponsibility, right? So when they go and have to raise taxes on money, where do you think they're going to go for it? I mean, think about it. They're $30 trillion in debt. There's $27 trillion sitting in these accounts. The government has the ability to just tax that wealth away from America and take care of their own problems. Now, I don't think they're doing that right now. They are doing other things. They're trying to inflate the problem away. That's one of the reasons they're printing money. They're not raising interest rates like they should be. It's a whole different video, but just important to understand this is all part of the problem. And this is another reason why cash flow, passive income investing is such an important thing, because when you invest for cash flow, you invest ultimately, when you do it the right way, in companies and hard assets that effectively have inflation protection. So value is directly tied to whatever that asset is, and if you can buy an asset that is directly tied to or kind of like hedged against inflation, if you will, because it's a hard asset, and as the dollar gets devalued, the asset value naturally, intrinsically, is going to go up in value with inflation. That's just the way it's going to work over the long run. So if you can get that hard asset also kicking out passive income through a dividend or some other sort of payment, then it really, really can work out in your favor. So the biggest mistake I would say that people make is that rather than saving, what they're focused on is investing for the long term, buying and holding, giving up control of their money. That is a huge mistake. And instead of doing that, really what they need to be focusing on is investing into a solid financial foundation, into a solid financial system. Now, this is what I would call the solution. And I'm going to go problem, solution, result, right? Like, let's go through this psychologically. So I gave you the problem. A big mentor of mine told me one time, focus 5% of the problem, 95% of the solution. And I'm going to tell you the solution is sometimes we have to slow down to speed up. Now, that's a principle in business. That's a principle with our money. That's an absolute principle, I think, in most of life, right? We have to slow down to speed up. One of the things that people do is they try to chase these massive returns and take way too much risk on too early before they have their foundation set. And by doing that, it doesn't put you in a position where you can actually invest for cash flow, because your money is tied up in accounts that are taking on too much risk, that maybe have a lot of upside, but the bottom line is it's not putting you in a position where you're actually in control of the results. If you can put yourself in a position where you slow down, meaning when I say slow down, I'm meaning stop chasing these big returns, stop trying to take on unnecessary risk too soon because you don't need to. When you slow down out of the gate and you focus on saving, getting smaller returns, focusing on building capital that you have liquidity, use, and control of, that you can tap into. Now what you do is you build a private, like a personal reserve account up, right? You build a personal reserve, a pool of liquidity, of liquid capital that you have access to, that now you're able to go out, you're able to find investments, you're able to be looking for opportunities in the marketplace, in whatever industry that you're looking for. I mean, there are, it's one of the reasons that my wife and I love real estate. We love the idea of turnkey real estate. It's one of the reasons we partnered up with Mike Wolf and have done what we're doing, on the turnkey real estate investment properties, because if you can find real estate that cash flows month one, right out of the gate, that you don't have to have your hands in, that's completely passive, right? Think about that. That's going to create for you a different result in your life. You're going to have not only the ability to create cash flow, but you're going to have the appreciation, you're going to have the tax benefits, you're going to have all these things that go along with it, right? So, I mean, I'm going to save all the details on the real estate for another video, but the bottom line, when we look at the concept of what I say, slow down to speed up, you have to, if you can't just, I think most people don't get into real estate investing when they want to, because A, they don't have the vision and they don't think they can do it, right? Because think about it this way, I can go out and I can just start pumping money into a Robinhood account, if you will, and I can start taking all that risk on and trying to, trade and put money into these high risk stocks and high risk investments and doing options trading and all this different stuff, which, don't get me wrong, that can create, a good short-term windfall of capital or returns, but it's not predictable. It's not long-term unless you have a real good day trading skill, which, quite frankly, I've talked to thousands of them. Most of them don't have that. You're not putting yourself really in a position where you have a predictable outcome on the other end of the strategy, right? So by thinking about real estate investing, for instance, I'm just going to use this one because it's the most obvious kind of scenario. You need to come up with, let's say, a $50,000 down payment on a property. Most 20-something-year-olds don't have 50 grand kicking around. While they can throw $1,000 into a Robinhood account, they can't come up with 50 grand. So the idea is they don't have the patience or the discipline or the vision to realize what this could all look like. So my concept of slow down to speed up is start saving. Save money in an account until you get to that amount, but save with the intent of investing that money. And when you invest, make sure you only invest in assets that create cash flow. Sometimes it may not be real estate. I did a video the other day, talked about investing in a business, investing in like Turo, investing in an Airbnb, investing in like an RV or a trailer that you can rent on Outdoorsy. There are all sorts of side hustles that you can leverage your capital to create great returns in, have more control of the results, and also increase your lifestyle along the way. And I think that's really what it comes down to, right? Like when you think about this, it's all about lifestyle. One of the things that really gets me passionate about doing what I do and sharing this information with people is people have been duped into thinking that the only way to hit retirement, or they've actually been duped into thinking that, the only way I can be successful with my money is go to school, get a job, invest in a 401k or qualified accounts, maybe put some other money aside into a brokerage account, stuff that money aside, save until I'm 65, hopefully be able to retire at 65. And if I do everything I'm supposed to do, I'll get there and I'll be able to retire. The reality is nothing could be further from the truth. 95% of the people in this country right now are either unable to retire and maintain their standard of living, or they're behind in being able, on the trajectory of being able to retire and maintain their standard of living. So to me, that's a systemic problem in our financial system. People are not set up to succeed with their money. And the idea that it's going to take you 40 years to be able to retire is just mind-bending to me. We need to stop thinking about how much money do I need to accumulate and start thinking about how do I invest to start replacing the monthly cash flow that I need to be able to sustain my standard of living and my lifestyle along the way. And the reality is, if you start thinking about investing for cash flow and you're willing to have the discipline and slow down to speed up, you're going to be able to start investing, saving with the intent to invest, and then invest your money into assets that will produce the result that you're looking for. And if you can slow down and be patient at the beginning, what you're going to do is you're going to really expedite the back end of the system. And rather than it taking 40 years for you to retire, it'll take maybe a decade or 12 years at the most for you to retire. And that is my encouragement to you, is to really look at that, really think about it. And once again, if you haven't yet, go down in the description below, get my copy, get your free copy of my new book, Cash Flow Hacking. Check it out. Once again, it is absolutely, I think, going to be one of the best books that you can read to simplify this. I'm a big believer. Personal finance does not need to be complicated. There are certain principles that you need to understand. And when you understand the principles, the objectives, and what money should be doing for you and how successful people think about money, I think it will make a lot of sense. So if you haven't already, make sure you hit that subscription button. Click the bell, that way you get notified every single time I launch a new video. We have all sorts of content coming out about cash flow, passive investing, and I know you're gonna love it. So if you have any questions, comment in the comment section below. I'll do my best to engage with every comment that I possibly can. Until next video, have a blessed, inspirational day, and we'll talk soon. See ya.